Welcome back to QAV America, Tony, episode 26. It's a beautiful day, Tony, in America. East Ballroom being torn down. President Trump's going to meet with President Xi. They're going to do the greatest deal. You won't believe how great this deal is going to be. It's going to be the greatest deal of all time. It'll last about a week, and then it'll fall apart, and there'll be more tariffs. But meantime, everything's going great. Market's up. US market was up yesterday, supposedly on the joy that all the beef is behind them. Rare earth minerals will be flowing back into the United States.
From Australia.
We'll see.
From Australia. But I think the market's up, but potentially more so on the fact that the inflation figures came in okay on Friday. And
did they?
Yeah.
Oh, okay.
Yeah. That's probably driving the market.
Interest rates are being cut?
I think the central bank meets this week. I'm not sure what day. Potentially today. I'm not sure.
Oh, okay. Well, before we get into my pulled pork for the week, I just thought I'd give an update on our portfolio and how things are going. Our US portfolio, which has been running, here's my smoothie delivery system. Thank you, dear.
Black belt smoothie delivery system. Brown belt.
That's right. Yeah. The portfolio that's been running since September 2023, so a little over 2 years, is up 57.6%, versus the S&P 500 up 54.7%. So we're beating the index just by a little bit, but that's okay. That's good. The pork situation, the pulled pork that I've done over the course of the show, I haven't had a look to see how they are doing. Where is that list?
Before you do that, you were talking about the Australian portfolio's performance, and for this financial year, which in Australia is only 4 months in, because we are 30th of June, end of year, financial year, and that's pretty good. Do you recall those numbers?
Yeah, well, I do. The Australian portfolio is up like 25% this financial year. Our financial year is from the beginning of July through to whatever we are now, end of October. For the calendar year, current calendar year, our Australian portfolio is up 31%. Versus the benchmark, the index here, which is up 14%. So a little bit, sort of double the Australian market. So it's going well. Year to date, our US portfolio not doing so good. It's down 16% versus the S&P 500 up 17%. But as I say every week, that's because our portfolio was up so much towards the end of last year before Trump took over the White House that it had a lot of gains and it's come back. It's not like the portfolio's done badly. It's just come back a lot from massive gains at the end of last year. It was like
must have had
inflated.
Lots of woke stocks in there.
Well, it was Willis Lease Finance Company, which was the big one. It was up 300%. It's now only up 175% since we bought it. I don't know how woke Willis Lease Finance Company is, but there you go.
Well, it was a black family with a white stepfather, wasn't it? Very woke.
What you talking about, Willis Lease Finance Company? That's what you're going for there? Yeah. Some of the companies, so I'm going to do a pulled pork on American Airlines this week, but some of the ones that we've done over the last 4 or 5 months, just a review of how they're doing. Some good, some not so good. Zim is down 20% since we talked about it in March. Methanex, we talked about at the end of September, is down 12. Titan Machinery is down 14. That's most of the down ones. In terms of the up ones, Zep Health Corporation, we talked about in July, is up 1,444% since we talked about it. Ford Motor Company, that everyone said was carrying too much debt when we talked about it in May, is up 23% since then. Let's see, Chemex, we talked about in March, is up 65%. Canadian Imperial Bank of Commerce, we talked about in May, is up 30% since then. Some big numbers. Sasol is up 28% since we talked about it in July. Precision Drilling Corporation is up 26% since we talked about it in June. IHS Holding, we talked about in May, it's up 27%. But a couple of weeks ago, or a month ago, 3rd of October, I did a pulled pork on Community Health Systems. Remember them? Hospital roll-up?
I do.
Up 47% since I talked about them at the beginning of this month, Tony.
They mustn't be doing vaccinations or dispensing Tylenol through that network.
47% since then. That's kind of crazy because it was a good story, but I didn't expect that.
And I guess the point to make is that a lot of those stocks aren't in our portfolio. You just pick a stock to do a deep dive on from our buy list, but we only change the portfolio over if something's a sell. So we don't.
Wish I had put all of those in.
Yeah, exactly. Yeah. So that's what I'm getting. That's what I'm getting at. I guess is that there are plenty of opportunities outside our portfolio to buy.
Yeah, plenty of opportunities, and things are going great. And I'm often seeing, as I've said before, people on the value investing subreddit saying they don't know what to buy, and I'm like, are you kidding me? Opportunity everywhere.
What you're talking about, Willis Lease Financing?
Willis Lease Finance Company? There are opportunities everywhere when we look at the US market and apply your QAV process to it. Well, this week I was going to do Shell because you used to work for Shell, your old employer. Yeah. They are on the buy list, but crude oil is a Josephine for us. It's in a sell state, so I thought I won't do that. So I looked around, and as every week, most of the buy list is full of finance companies or shipping companies. That's been true for the last 6 months, still true today, and I'm sick of talking about finance companies and shipping companies, so I'm always looking for something different. And this week I picked AAL, American Airlines, which was on the buy list. Now, I'm going to preface it by saying after I did 3 hours of research on it, I checked its chart and realized it's a Josephine, which for us means it's above its sell line but below its buy line. It's recovering from a bit of a dip. No, sorry, it's not a Josephine. It's not even a buy. It's not above its buy line at all. But that's because my script had a bug in it. My US script had a bug in terms of doing the charting analysis. So when I was doing this yesterday, the current price was about $13.78. Buy price is actually $15.87, so we wouldn't buy it unless it went above that. But it's an interesting story, and I wanted to do it anyway to get your thoughts on it, assuming that it does become a buy, because it's got a lot of problems, a lot of possible red flags, and it's also got a big points system. And I know that you used to run a points-based company here for one of Australia's largest retailers, so you know points.
CFO. I didn't run it, but had a management
CFO.
position.
Oh, I thought you were the CEO of it.
No.
Okay, well, still a good story.
Yeah. I still have a fair bit of experience with loyalty programs, for sure.
Right. So I'm looking forward to getting your thoughts on this when I run through it. Basically, American Airlines is a domestic heavy network with a loyalty cash engine. A lot of possible red flags, though. It's all about the PRASM, Tony. That's what I'm going to call this episode. It's all about the PRASM. PRASM, passenger revenue per available seat mile.
Yes.
And it turns out if you don't have enough PRASM, you fall into the chasm, which is, it's a real thing. Cost per available seat mile is your PRASM versus your chasm. Your revenue versus your cost.
Well, it's interesting because Warren Buffett, who famously didn't like buying airline stocks, but did, he came out, he used, I think he called it kilometres flown per seat or something like that as an example of what he called the heavy lifting KPI. And he said every industry has one, but just one. It's usually as a ratio, like something per something.
Yep.
And he used this one as an example of what to look for when you're analysing industries and companies.
The PRASM. I mean, Americans are going to be very familiar with American Airlines. I've flown on them. You've probably flown on them. If you've flown them into America, around America, you've probably flown on them at some point. Giant passenger airline based out of Fort Worth, Texas. Fort Worth, Texas, by the way, birthplace of Shelley Duvall, Larry Hagman, Ornette Coleman, John Denver, born Henry Don Duchendorf Jr. Probably a good thing that he changed his name.
They call it
the
John
birthplace
Denver,
of Mark.
not John Texas.
Yeah, not John Fort Worth.
No.
Funnily enough,
Yeah.
it didn't roll off the lips. And it's also the birthplace of Mark David Chapman.
Nothing's going to change my world except for Mark David
Chapman. Is he still around? I think he's still around.
Well, as you know, I'm watching
AAL
the Scorsese documentary at the moment. And they went through how Brinkley was obsessed with Taxi Driver and was thought to be reenacting the attempted presidential assassination in Taxi Driver when Brinkley shot Hinckley shot Reagan.
Yes, that's the famous story. And I've told you about Hinckley and his connections to the Bush family before, right?
No.
It's one of my favorite conspiracy theories. So the Hinckley family, also from Texas, one of the biggest financial supporters of George Bush Sr.'s presidential campaign. He was obviously vice president when Reagan was president. On the day that the assassination attempt happened, Hinckley's older brother was supposed to be having dinner with Jeb Bush. They were that connected, the Hinckley and the Bush families. And then Hinckley tried to kill Reagan. If he had killed Reagan, George Bush Sr. would have become president. And it never gets talked about, the connection between the Hinckley and the Bush families. It's like, I remember first reading about it 20 years ago and going, holy crap, that's crazy.
And so
how come I'd never heard that before?
They blame Taxi Driver instead.
Blame Taxi Driver. Yeah. So there you go. Anywho, AAL, largest airline in the world in terms of passengers carried and daily flights. Almost 6,800 flights per day to nearly 350 destinations in 48 countries, serves more than 200 million passengers annually, averages more than 500,000 daily, has about 103,000 staff members. It's huge. It's a huge airline. Core business is selling seats and bags on mainline and regional jets. They have the AA brand, larger jets. They also have smaller jets that are known as American Eagles for domestic travel. Also makes money from cargo fees and a loyalty machine called A Advantage. That is a big part of the story. This is where the loyalty program, obviously part of it comes in. They sell miles to banks
for
co-branded credit cards. Yeah. In 2024, AAL generated record revenue of $54.2 billion and had record free cash flow of $2.2 billion. But it's carrying a titanic amount of debt. $32 billion in debt it's carrying. So, we're not opposed to debt all the time. Debt can be useful.
And essentially, airlines are
source of leverage.
That kind of company too. They're basically the opposite side to Willis Lease Financing. They're always leasing aircraft from people. So they're always carrying debt. They don't buy the planes. They probably couldn't afford to. So they lease them. Gives them a lot more leverage in terms of being able to operate a lot more airlines if they lease them rather than buy them.
I don't know what their lease versus buy ratio is, to be honest, but I know that there's problems with a lot of the planes. And I also know that airline travel is easily disrupted. Obviously, we saw during COVID, but there's a lot of other things that can disrupt it, which is part of the story. It's a difficult business. It's a very difficult business to run.
It's often taken as the other side of an oil trade because as the oil price drops, the profitability of an airline increases because one of their biggest costs is fuel.
Yep.
Yep.
Anyway, a little bit of background. Sort of began during an amalgamation of about 80 small airlines in the 1920s. In 1926, there was a union of more than 80 small airlines, and it was sort of run by an aviation pioneer called C.R. Smith, pulled them all together. One thing led to another, and they sort of I think initially they were just doing cargo. It wasn't passenger based. It was cargo, flying stuff around, and mail carriers and other sorts of cargo they expanded into. Then it moved into passenger airlines, listed on the NASDAQ eventually, and they launched AAdvantage in 1981, which is apparently often cited as the modern frequent flyer template. They, if not invented it, came up with the model for how to make those sorts of things work. In 2011, due to a downturn in the airline industry, their parent company, the AMR Corporation, filed for bankruptcy protection. And then in 2013, American Airlines merged with US Airways, but kept the American Airlines name because it was the better recognized brand internationally. And it was the merger of those two that created the largest airline in the United States and eventually the largest airline in the world. So I want to talk about the card deal that they recently did. In December 2024, they announced that they'd signed a 10-year exclusive co-brand deal with Citi, who are taking over the business from Barclays in 2026. And I don't understand much about how these point systems work, paid very little attention to them over the years, so you'll be able to explain how this works to me. But basically, as I understand it, the bank pays the airline for the miles. People earn miles when they travel. The bank buys those off them and then uses them to get people to buy stuff on their credit cards. Is that how it works?
Kind of, yeah. So the points are a product, and so American Airlines make a margin by selling points to the banks, who then issue them on credit cards, often funded by what's called the interchange fee. So the bank isn't actually paying for it themselves. They're passing it on to the merchants who pay a fee when the credit card's used in store. So there's that. But yeah, so they might the airlines make money out of a margin on the points that are issued. So they sell points to the banks. The banks use the merchants or the retailers to pay for that usually. And that attracts people to use one particular credit card over another one because credit cards are much of a muchness. They tend to charge similar sort of fees and interest rates, and then some will have points on a better deal than others. And so people, almost religiously compare the points and go to the card with the best deal, best yield in some respects. So it's good for the bank, good for the airline. They get a margin on the points they sell to the bank, but also they get what's called breakage. So not all the points get redeemed. So some people will collect points and never use them. They'll never ring up the airline and book a flight, or these days it's not just flights. Of course, you can get product to redeem your points for as well. And there's a margin in that for the airline, just as there's a margin if they take a flight. The airline makes a margin on that as well. So the cost of the points used to book the flight is still providing a margin to the airline. But there's a breakage, so people don't redeem all their points, and so their points lapse. Oftentimes these points come with a life cycle, so after 3 years or 5 years, they're worthless. And if you haven't used them by then it's actually 100% margin to the airline. And then you've got you've got a thing called the redemption rate. So what percentage of the points are going to be redeemed anyway, and for what things? And then that there's a fair bit of actuarial work that goes on behind the scenes to tweak what products are offered, what the number of points are for those products, be they airline tickets or shavers or toasters or whatever, and then how many points are being redeemed for those things. And it's a big math puzzle. So an actuarial will have like a 3-year, if the life of the points is 3 years by month, historical profile of who's redeeming what and for what. And then they'll say, okay, we think that if you issue a new point now, I'm just picking a number here, 60% of those points will be redeemed, and they'll be redeemed for these things, and therefore you should price the point at this much. And so airlines are always juggling that. So it's a fair bit of math goes into it, and it's a big machine, but it's designed to make money for the airlines.
Wow. Well, in AAL's case, they earned roughly $5.6 billion in the 12 months which ended 30th September 2024 from cash remuneration from co-branded cards and other partners. But starting 2026, they're making Citi the exclusive issuer. They expect to make more money out of that, reducing overlap and competition between issuers, reducing carve-outs, and they're expecting the amount of cash that they get out of the card or the point system to go from 5.6 billion to nearly 10 billion annually under the new deal. So that's going to result in 1.5 pre-tax income, an extra 1.5 pre-tax income at maturity. So it's a good deal for them that's going to bring in a lot of extra cash. And it's, as I understand it, it's sort of is a bit of a buffer to the fuel prices and the problems with engines and planes and flights and all that kind of the waviness of their regular business. Right?
I did a little talk on Qantas, the Australian airline, for our Australian show last year or the year before, and I think from memory the points business there, which would be similar to American Airlines, I would think, was a third to a half of their profit, something like that. I think from memory, Qantas made no money or almost no money out of international travel, a lot from domestic and a lot from points. And from time to time, there's always talk about spinning off the points business because as a standalone business, it's quite profitable.
Good business.
Yeah. And so that's always up the sleeve of airlines like American if they do get into trouble with debt or whatever else to potentially spin it off and get a big cash injection back into the underlying business from doing that.
Well, in terms of their mix of their operating segments, it's basically all fits under air transportation, but they do break it down by business line and geography. But the basic breakdown is domestic is about 70% of passenger revenue, and the international split, Latin, Atlantic, and Pacific. And cargo is sort of fairly small, single digit. Advantage, it's very hard to say that. Advantage is really the high margin side of the business. But it's discounted, which is why it's turning up on our buy list. And I was trying to figure out why the market is discounting it. Seems to be a number of reasons. I mean, airlines are cyclical, capital hungry, weather exposed to labor, exposed to fuel, exposed to problems with engines, which is a big thing. And AAL is also much higher leveraged than its peers are, apparently, carrying way more debt. But then they got these problems. Well, it's an industry-wide problem at the moment with the Pratt and Whitney engines. P&W. They've got the GTF family of engines, geared turbofans, particularly the PW1100G-JM engine. It's personally my favorite engine. It's used on many Airbus aircrafts, A320s. It's been hit by a manufacturing flaw, contaminated powder metal in parts used in high-pressure turbines, which can lead to cracks and early removals. So this is leading to a lot of maintenance that needs to happen to aircrafts. They're grounded, means lost flying capacity, fewer seats, lower revenue, et cetera, et cetera. So the question for American Airlines isn't whether or not they're exposed to this. They are. It's just how much the ripple effects are going to hurt their revenue this year. Add in labor inflation, there's some soft spots in domestic demand, and basically they're trading at a fairly low multiple at the moment. And all of the debt which they're carrying, which has got the market a little bit scared off, apparently, the $32 billion. They have been paying off the debt, been paying it down, and that means they've got a good Piotroski F-Score. So their Piotroski F-Score is an 8 out of 9. And so I was trying to figure out, if they're carrying so much debt and that is such an issue, why do they have such a strong F-score? But of course, the F-score is a trend score, like the financial trend we use in Stock Doctor. It's not an overall financial health score. It's a trend score. So they're paying off the debt. Their situation is improving year over year. So their F-score is pretty good. Doesn't mean that they couldn't run into problems with that amount of debt, just that they've been improving their situation over the last couple of years. So they've moved from bad towards less bad, maybe. They're paying debt down, interest coverage is improving, margins have normalized post-pandemic, cash flow has returned. So that's ticking a lot of the F-score boxes. Profitability has returned since the COVID days, but doesn't necessarily mean they're out of the woods. So I think I think the market is looking at the fact that there could still be lots of crises with the US economy. If the economy collapses, airline seat sales could take a big hit. Whatever happens with the US and China could, have an impact on flights, both domestic and international. So the market's factoring in a lot of possible problems. There's a lot of things that could go wrong with the business, whereas we tend not to forecast, and we don't tend to look at macroeconomics or anything like that. We just look at the numbers, and from our perspective, it looks pretty good. There is one other issue, though, that I wanted to talk about, which is climate change. In terms of flight issues, climate change is apparently one of the biggest problems for airlines right now, is extreme weather events that are impacting on flight patterns. Extreme heat causes air density to decrease, which makes it harder for planes to take off, causing the airline to burn more fuel and therefore affecting both profits and the planet.
Yep.
High temperatures can also affect the weight limit, which reduces the maximum revenue generated by each flight. A Harvard University study estimates that 30% of the flights departing during the hottest times of the day will not be able to carry their weight capacity by 2050.
Hadn't thought of that, but it makes sense.
Yeah, me either. So there are some of these impacts, or some of these things about climate change that are going to have, are having and will continue to have real impacts on businesses like this for reasons that aren't obvious to lay people outside of the industry.
Well, how hot was it in Brisbane where you're recording yesterday?
38 degrees Celsius.
And we're in spring.
Well, yeah, still in spring. Convert 38C to F, ChatGPT. I used to be able to do this in my head when I spent a lot of time in the US.
Now 32,
it's been a while.
70, what was that, 100?
That's it?
Yep.
100.4.
Yep.
Officially, yep, that's a fever, says GPT. Step by step so we don't commit arithmetic war crimes. I thought it said anti-Semitic war crimes. Okay. So, yeah, it was hot. That's unseasonably hot for Brisbane, which does get a bit warm, but even so. So, basic analysis. My basic analysis of this is it's a miles mint. It's generating $6 now, soon to be $10 billion a year in just easy cash coming from these miles. It's got the largest airline in the world, largest in America. Debt is shrinking, but, with a lot of possible problems. But that's what we pay the management to navigate, is to figure this shit out, right? They're professionals. That's what they're there to do.
Correct. But also, too, I'm guessing you're going to get to the prop cap figure, which is going to solve a lot of problems. Yeah.
So I'll get into the numbers. So at a QAV score level, it's a 0.21. It's quite a ways down in my US buy list. It's probably in the top 30. But I went down that far because I'm looking for interesting things to talk about, as I said earlier. But its prop cap is 2.41 price to operating cash flow.
You've got to do a lot of things wrong with a company that's producing that much cash, really.
The largest airline in the world, generating $6 billion a year in revenue from just points, selling points, let alone everything else. Like it seems like
You can buy
easy money, right?
2 times cash.
Yeah. Average daily trade is just short of $1 billion, $979 million average daily trade. In terms of the scoring, it's got a quality rank of 64, so we score it for that. It's got a stock rank of 96, so we score it for that. It's got an F-score of 8, as I said, so we score it for that. Doesn't score, it's above our intrinsic values. Our IV number 1 is $4.52. Price is currently $13.78. Our IV2 is $5.87, so it doesn't get a score for either of those. Doesn't score for price less than book because the book value is negative $4 billion. So, yeah.
Oh, that's interesting.
Yeah. It's not getting a score for that.
Negative $4 billion for book value. Wow. Okay.
Yeah. Which I just, that's the amount of debt.
Yeah, right.
Less, assets, less liabilities that they're carrying. Growth over PE is not greater than 1.5, so we're not scoring it for that. Book value growth is not positive. It's very much not positive. Couldn't score it for anything else, really. So in our checklist, total number of items was 12, got a score of 6, which is a 50% quality score from a QAV perspective. Not as high as we would like it to be, but with that prop CAF, it shoots out the lights pretty well from a QAV score perspective. But, as I said, a lot of issues, a lot of potential problems. But, I don't know, TK, what do you think? What's your analysis on something like that?
Well,
Follow the numbers?
Yeah, well, it just reminds me of Qantas so much, really. And that's been on our buy list for a while now, and it's done incredibly well for us over the last couple of years.
It's done well.
Yeah.
Yeah.
Again, whenever a stock like Qantas comes on the buy list, people say, it's an airline, who wants to own that? And it's got plenty of debt and blah, blah, blah. Lots of issues. How could it do well? And it's doubled in price over the last year or so. So, yeah.
Yeah.
Yeah. Having a high prop CAF really does give management a lot of tools to work with to solve these problems.
High prop CAF or a low prop CAF?
Oh, low prop CAF, sorry. High cash flow.
Yeah.
Yeah. I was just trying to find what the book value was for Qantas, if I can quickly, because it might also have a negative book value. Just let me have a quick look. In other words, it might be endemic to the industry that they run high debt loads because they're carrying all these leases on planes. Yeah, can't find it quickly. Equity per share. Equity per share is positive for Qantas, but it's only about 50 cents, and the share price is $10, so it's almost zero, really. Equity per share. So it's a similar sort of, not as bad as American Airlines in terms of its debt load, but it's to me it looks like it's trying to balance its debt to equity.
Yeah. They're like almost an even situation. So that is American Airlines. That's all I've got with that.
Interesting
but
discussion,
as I said,
though, isn't it?
Not quite a buy for us yet. Its price would need to get up a little bit more to get over the buy line. So it would be a watch and see for us. But if it got over the buy line, I'd probably give it a shake.
Yeah, good.
Oh, that would change the prop CAF too, slightly. If it went from $14 to over $15, it would change the price to operating cash flow slightly, but I don't think it'd have a dramatic impact on it.
No.
All right, Tony, well, check that one out, folks. If you're looking for something, put that on your watch list, perhaps. AAL, do your own research, though. Well, that's the main part of the show. You got anything for me?
For after hours,
Tony?
Still working my way through Scorsese, which is just brilliant. Just loving it. Equally as interesting to go through all the lowlights of his career when he made movies that weren't as well received, like Kudan, and he made a small movie which I love called After Hours, which did okay. He made Bringing Out the Dead.
I only heard about After Hours like a few months ago.
Love it.
I've been trying to track it down. I watched the trailer. I've been trying to track down where to watch it. It looks great.
It is great. Griffin Dunn stars him. And it was really Scorsese. What was he coming off the back of? He came off the back of a flop. Oh, King of Comedy, I think. And
King of Comedy be a flop.
It was,
It's a great movie, King of Comedy.
Yeah, it wasn't well received when it came out, though.
Yeah, really. Just to like sort of that dark comedy thing. People didn't associate Scorsese with that.
Yeah, and the way he tells it was more of a De Niro vehicle. De Niro really wanted to make it, and Scorsese's heart wasn't in it so much. So that was interesting. But I like
Sandra
it too.
Bernhardt, Jerry Lewis.
Yeah.
Great.
So the way they shot it was they had all these scenes where Jerry Lewis would be walking down like Fifth Avenue in New York or something, or going to 30 Rock or whatever to shoot something. And Scorsese would be pulling his hair out saying, "We've got to have the extras here. They've got to be doing this." And Jerry Lewis said, "Nah, just watch. Roll the camera." He started walking down the street and cars would pull up. "Jerry, how you doing?" And he just sort of wave and keep walking. And people would come up and he signed autographs and just keep walking. Completely unscripted, but he knew exactly what would happen if he walked down the street.
Wow. He's Jerry Lewis. Yeah.
So, but great. And then they go through The Last Temptation of Christ, which was fantastic. And, how the Christian right, took up arms against it, and he had to wear a bulletproof vest at the Academy Awards that year and all this kind of stuff. So, just amazing. Great series.
Yeah.
Great series.
Oh. I look forward to checking it out. By the way, I did mean to mention, I checked my audit script. It does look for disclaimer of opinion. Yeah. It didn't have DGL because I think the last time I ran it, it was before their report came out. I ran it in September, so I've got to run it again. I'll have to.
Yeah.
I thought all the major reports would have been out by then, but I might just set it to run once a month.
Yeah, it's a good idea.
All right. What else you got?
No, that's it. Horses are racing. So I got Lake Forest on Wednesday, Bendigo Cup dates racing there, if this goes out in time, and then Quello Dorato next week. Perhaps on Melbourne Cup Day, but also perhaps on Kyneton Cup Day the following day on Wednesday next week.
Finestone Cup Day? Is that what you're calling it?
Yeah. Jenny and I are going up for it too. We've got an event up there we're going to. It's a good idea. I'll call it. I'll go walk in and say, better let me in. Yeah.
Yeah. Finestone Cup Day. I'm still reading Gravity's Rainbow.
Mm-hmm.
Not sure I'm going to continue with it. It's too convoluted to read at midnight. I'm like, what the hell is going on with this?
It is. Yeah, it's a very convoluted story.
Yeah, man. I was talking to ChatGPT about it because I have to look stuff up. Like, what's he talking about here? Because he's like so many sort of scientific and historical references just absolutely embedded in it. And I'm like, what's this? What's that? What's the other? But I kept saying, I thought this guy was the protagonist. Pirate. Somebody goes, well, no, he was for the first 30 pages. Then it flipped to this guy and he'll flip back to pirate, but it's not, it's all over the place.
Yeah.
Keeps you on your toes. Finished Elephant Man. Loved it.
Mm-hmm.
Again, sort of beautiful, very, very simple, sweet, sad sort of a story. Not your typical Lynch vehicle. Although at the end, when I don't know if you remember, but at the end as he's dying, spoiler alert, people haven't seen the film from 1980, the face of his mother appears in space and just sort of hovers there. Very Laura Palmer-y. Like it's got this whole sort of, it finishes with a sort of a preview of Laura Palmer-y sort of head in space, dead, something, which, and Twin Peaks didn't come out for another 10 years or whatever it was. Was it 1990, I think, Twin Peaks?
Mm.
But anyway, that's about it. Oh, we had a kung fu grading on Friday. That went well. No broken bones, no broken noses. We survived that.
So take us through it. You were beset by attackers for an hour or so, and you had to fight them off. Is that how it goes?
Well, 2 hours. The
2 hours.
first 90 minutes was probably demonstration. So we have to do our techniques, dummy sets, forms, paired up with one person who's like a black belt. Usually they're throwing random punches, kicks, whatever at you. And Sifu's like, show me this, show me that, show me this technique, show me that technique. And you just have to stand there and block and counter punch and counter strike. Sweeps. We did a lot of sweeps. Hit him, take him to the ground, punch him in the face. Didn't do baseball bat or knife defense. He didn't. We ran out of time, I think. There was so much stuff he wanted to see, and we just ran out of time for that, unfortunately. Then, and the dummy sets, the wooden dummy. We had to do our dummy sets on the wooden dummies, all that kind of stuff. And then sparring. So then we did I don't know how long the sparring went for. Felt like an hour. It was probably 10 minutes. Actually, I think we went through about 15 rounds of sparring, 15 to 20 rounds of sparring, and I think they went for 2 minutes each. So, yeah, it was probably half an hour to 40 minutes of sparring. The guy who was with me at the end, he said to me afterwards, I kicked you in the ribs and you didn't flinch. I thought, oh, Cameron's done. I said, I was just too tired to block it. I just thought, I'm going to wear it. He said, yeah, but you didn't even move. You didn't even try to block it. I was like, yeah, I was too tired, man. Too tired to try and block it. That was good. I was really proud of Chrissy. She did really well. So yeah, our next belt is our black belt. So we've probably got 18 months to get ready for that. Right. So that'll be the next thing to do.
Does that mean you can go out and become a kung fu trainer or a sifu and open up your own, what do they call them, dojo?
Dojo? That's Dojo? Japanese, okay. Yeah. We call them a quoon. In Chinese, it's a quoon. Well, possibly, yeah. Bruce Lee only did 2 years of Wing Chun, and he went to America and started his own school of Jeet Kune Do. But, yeah, I don't think that's in the cards. Although when AI takes over everything, then maybe teaching Kung Fu's all we got left. Till the robots come and teach Kung Fu. I saw Elon had his robots doing Kung Fu demonstrations this week at a movie premiere in LA.
Were they plugged in or were they autonomous?
No. It was the Tron premiere, I think, and okay. he had one of his robots out the front doing Kung Fu. So that's that. All right. All right.
Okay.
Have a good week, everyone. Thank you, TK.
Thanks. Bye.
QAV is a checklist-based system of value investing developed by Tony Kegniston over 25 years. To learn more about how it works and how you can learn the system, visit our website, qavpodcast.com. This podcast is an information provider, and in giving you product information, we are not making any suggestion or recommendation about a particular product. The information has been prepared without taking into account your individual investment objectives, financial circumstances, or needs. Before you decide whether or not to acquire a particular financial product, you should assess whether it is appropriate for you in the light of your own personal circumstances, having regard to your own objectives, financial situation, and needs. You may wish to obtain financial advice from a suitably qualified advisor before making any decision to acquire a financial product. Please note that all information about performance returns is historical. Past performance should not be relied upon as an indicator of future performance. Unit prices and the value of your investment may fall as well as rise. The results are general advice only and not personal product advice. Transparency is important to us. We will always be very open and honest about the stocks we own. We will also always give our audience advance notice when we intend to buy or sell a stock that we're going to talk about on the podcast. This is so we can never be accused of pumping a stock to our own advantage. If we talk about a stock we currently own, we will make it known that we own it. This email is authorized by Anthony Kegniston, authorized representative number 0012922718 of MF & Co., Asset Management Proprietary Limited, AFSL 520442. No part of this content may be reproduced in any form without the prior consent of Spacecraft Publishing. Quote of the day, as the physicist Richard Feynman said, "Science is what we have learned about how to keep from fooling ourselves." The beginning of infinity. David Deutsch.